Okay, welcome to a new deep dive. This is where we take source material, put it under the microscope, and figure out what's really important for you to know quickly and clearly.
That's the plan, sort of cutting through the noise, finding the signal within the data and insights presented.
And today, we're wading into the world of crypto. Our source material gives us a pretty fascinating look at two seemingly different stories happening at the same time. Who's actually holding crypto and what seems to be causing some significant short-term price movements.
Yeah, we're pulling insights from an article called Bitcoin Hits 55M Holders as Musk-Trump Drama Shakes Markets, published June 7, 2025. The data's up to June 5th and 6th.
Right. So our mission here with this deep dive is really to unpack those two core threads from the article. First, what do the numbers actually tell us about growth in crypto adoption? Is it really growing?
And then the other side. How does something like, drama between big names and all the social chatter that follows, how does that seem to influence market volatility, at least according to this source?
Exactly. You've got this long-term picture of more people getting involved and then these really sharp short-term price swings. So what's the story behind both based on what we're reading here? Let's jump right in.
Okay, let's start with the holder story. Focusing on the numbers presented, the headline figure the article leads with is Bitcoin hitting a new all-time high. 55.39 million holders as of June 5, 2025. That's a big number.
It is a really big number, but what's immediately striking when you look at the source is how it compares to Ethereum. The article highlights Ethereum's pretty significant lead, actually, 148.38 million holders.
Yeah, much larger. That's nearly 3 times as many holders as Bitcoin. It's
Mm.
quite a difference.
Huge difference.
And the article, it uses data from Santiment, the blockchain analytics firm that tracks on-chain stuff, but also social sentiment, and it shows Ethereum's specific growth pattern. It apparently had unmatched growth through 2024 and into 2025.
With a really dramatic surge mentioned specifically in November 2024, like a big jump.
Oh, a big jump, yeah. Now contrast that with Bitcoin's growth over the same period, so June 2024 to June 2025, like the article describes it.
Okay.
While Ethereum had those sharp surges, Bitcoin's adoption, it says, grew consistently.
Consistently.
The source points out it did this without those big spikes or fluctuations, so
Yeah.
it makes its growth look quite resilient, like a steady climb.
Interesting. So slower but steadier for Bitcoin, more explosive for Ethereum in that period.
That seems to be the picture painted, yeah.
Yeah.
The article also gives us some context, listing holder counts for other major networks they mention, just to show the broader picture of where people are parking their crypto interest.
Right. Like who else is big?
Well, Tether, USDT, the big stablecoin, had 7.79 million holders. XRP was next with 6.53 million.
Okay.
Then Cardano, ADA, had 4.49 million. And USD coin, USDC, another stablecoin, logged 3.30 million.
Gotcha. And I think Chainlink was mentioned too, Lang.
Yeah, rounding out the top 8 they listed, Chainlink, LA & Co. had 766,010 holders, smallest among that group mentioned. Now, the article does note one exception to this kind of general positive growth trend, Dogecoin.
Ah, Dogecoin. Let me guess. Volatility.
You got it. Showed major swings in its holder count during this same period, which, feels very on brand for Dogecoin, doesn't it?
Yeah. Yeah, fair point. Okay, so Doge aside, the core synthesis, the main takeaway from this data in the source material is that all these other major networks showed net positive growth from June 2024 to June 2025.
Exactly. And that's really the crucial takeaway from this part of the article. This widespread positive growth across multiple big networks signals rising mainstream interest. That's what the source suggests. Interest in these blockchain ecosystems overall, that seems to be the underlying fundamental trend they're highlighting.
Okay, so that's story number one. Steady adoption, growing numbers, increasing mainstream interest. But then the article pivots pretty hard, doesn't it? Talks about something else entirely. The short-term market chaos, the volatility. What drove that?
Right. It moves straight from that consistent long-term picture to the immediate turbulence. And the source identifies a specific event it connects to recent price swings. A public rift, apparently, that developed between Elon Musk and Donald Trump.
Okay, two very influential figures. The article describes them both as having significant reach, especially maybe in the crypto space, and suggests this tension between them really stirred up reactions online.
Yeah, big reactions. Some people apparently shrugged it off, just drama. But others worried it could lead to a serious market downturn, a bearish outcome.
So what happened in the market, according to the article?
Well, the reaction was brief but sharp. Bitcoin's price dipped noticeably, specifically down to $100.05K.
Ouch. But here's where it gets really interesting, as the article points out, right? That dip didn't last long at all.
Didn't last long. Bitcoin quickly rebounded back up to $105 4K.
Wow. Okay, so dip and recovery. What's the article's take on that?
Well, this rapid dip and recovery leads the authors to an interpretation. They suggest this whole incident may end up being a sell the rumor, buy the news event.
Ah, okay. That classic market pattern. Explain that again quickly.
Yeah, it's where a price dips when people are anticipating potentially negative news, maybe rumors swirling, but then it often recovers quickly once the actual event happens. And maybe it isn't as bad as feared, or perhaps longer-term buyers just see it as an opportunity and step in.
Got it. Sell the rumor, then buy the news or the reality. Okay.
And the article directly connects this price swing to social media sentiment, again using that sentiment data. It highlights that social media discussions about Bitcoin absolutely exploded right as that price dipped on June 6th.
Exploded.
The specifics in the article about the social data are pretty telling. The sentiment charts they included, they show soaring mentions of Musk, that's the blue bars, and Trump red bars, spiking heavily in late May and early June.
Right when this public tension was brewing and the price was moving.
Exactly. So the conclusion the authors draw from lining these things up is that the data strongly suggests this surge in social sentiment directly impacted those specific price movements.
So the chatter wasn't just happening alongside the price move. The article is basically saying it was driving it.
That seems to be the implication, yeah, that the sentiment drove the action. And to give some context for where the price was trading during all this, the article notes Bitcoin was moving between 95K and $110.
A pretty wide range.
Yeah, and it specifically calls out $100K as a significant psychological support level,
Uh-huh.
which is right around where it dipped to before that bounce back occurred.
Well, that $100 5K dip. And the article points out that the price recovery then aligned pretty closely with public discussions continuing about the incident.
Exactly, suggesting that sustained attention even after the initial shock played a role, maybe even in the bounce itself.
Interesting. So what's the broader takeaway here, according to the source?
Well, a broader implication highlighted in the article, really for anyone watching the market, is that social dominance, which means how much a specific topic or asset is being discussed online compared to others, is increasingly seen by market observers as a strong gauge of sentiment.
Like taking the temperature of the crowd online.
Precisely.
Yeah.
And importantly, the article suggests that combining these social signals, this crowd temperature, with traditional technical analysis, well, that may be a powerful way to help forecast future price shifts.
So it's adding this layer of public opinion measured by social data onto the usual charts and graphs.
Yeah, it's about recognizing that in a market that's, heavily influenced by retail investors and public perception, sentiment can be a really important indicator, maybe leading, maybe coinciding with price action.
Okay, so let's try and pull these two main threads from the source material together then. On one hand, we've got this picture of consistent, fundamental, long-term growth in holder counts across major crypto networks, clearly signaling increasing mainstream interest.
Right, the underlying adoption story. And then on the other hand, we have this very clear example of immediate sharp market volatility that the article ties directly to social drama and the sentiment swirling around powerful, high-profile figures like Musk and Trump.
So what this article seems to imply about understanding the crypto market, at least right now, is that there's this kind of solid foundation building underneath, this increasing adoption, genuine interest.
But layered on top of that, there's also this significant vulnerability, susceptibility to short-term price swings that can be very much driven by these external social factors, the influential voices, especially when they stir up a whole lot of online discussion and noise.
Okay. So what have we really unpacked for you from this specific source? We've seen the concrete numbers pointing to expanding crypto adoption. I mean, Bitcoin hitting 55 million holders, that's no small thing.
No, definitely not. And we've walked through the specific example the article gives of how, the drama and the resulting social sentiment around figures like Musk and Trump can seemingly translate almost instantly into market volatility, hitting that key $100K psychological level before recovering, all within that wider, say, $95K to $110K trading range.
And the article suggests this specific event might be a classic sell the rumor by the news pattern. And it importantly emphasizes that social dominance, that measure of online buzz, is gaining traction as a key sentiment indicator, potentially useful alongside, the traditional technical analysis for forecasting.
Exactly. So given these two insights from the source, the steady fundamental adoption on one side and the potent immediate social influence on the other. Maybe here's a final thought for you to consider as you look at this space.
Okay.
As the crypto market continues to mature, continues to attract more and more participants, how might that balance? The balance between these underlying fundamental adoption trends and the sort of impact of social sentiment. How might that balance continue to evolve?
Good question. And how does keeping an eye on that tension, that push and pull between the long-term growth driven by more people actually getting involved and the short-term noise driven by social dynamics, how does observing that maybe change how you think about trying to understand and track these market movements yourself?
Something to mull over. And that's our deep dive for today based on the source material.